In terms of S corporations, another recent tax court controversy involved bad debts. To what extent can an S corporation pass through a business bad debt to its shareholders?
Bad debts of S corporations can be business bad debts or non-business bad debts, but advances to a corporation may not necessarily be a loan. It could be an equity investment.
John Sensenig was the sole shareholder and president of an S corporation known as CLCL. The company provided high-risk capital to various other businesses. In addition, CLCL also owned an equity interest in each of those companies. Yet there were no loan documents. So who was to say if the capital was debt or equity?
In this situation, the advances weren't accompanied by any of the indices of debt. There were no loan documents. He didn't do due diligence on the so-called borrowers. Despite all of this, his S corporation took a $10.6 million business bad debt when the so-called loans went bad.
Of course, the IRS did not want to grant the company a business bad debt. But how did the tax court view the situation?
The tax court said that the advances were equity investments, they weren't debt, so therefore no bad debt deduction.
In general, there are specific rules or conditions for claiming a business bad debt.
For a business bad debt, there are 3 conditions. First, you have to show that the advance is actually a debt, not equity. Then you have to show that the loan went bad in the year in which you're taking the deduction. And third, in order to show that it was a business bad debt, you have to show that it was incurred in connection with a trade or business and not made as an investment.
Once again, we asked Barbara Weltman, what could have been done differently?
A taxpayer can arrange the advance of funds any way he or she wants. You can arrange it as a debt or as a contribution to capital and equity investment. But if you want to have it as a debt, you have to be sure to cross your T's, dot your I's, and treat it as such. So again, the burden is on the taxpayer to follow through to make sure that the transaction comes out the way you intend it.